What is going on, investors? Hopefully, you guys are doing well out there. Time to talk about Roku, which reported Q2 earnings today after the bell. Now, before we posted earnings over at Roku, stock was at about $420. Now we're seeing that this stock is down a solid 8% in the after hours, trading closer to $382 per share. We'll talk about what this means from a technical perspective here in a second. Now, the earnings came in, and from the earnings side, the revenue side, all things looking pretty good. In fact, we were up 81% year over year on the revenue to $645.1 million. Now, what I think has investors concerned a little bit is active number of accounts went to 55.1 million. The street was expecting 55.8 million customer accounts. And so I think that has investors worried a little bit. We'll see if Cathie Wood is worried or if she'll come in here and buy the dip. My guess is it will be the latter of that. In the ARK Innovation ETF, which is the flagship fund of Cathie Wood's, they have a 5.5% weighting on Roku shares. And my guess, again, is likely she will buy the dip. That has been her MO since day one of running that ETF. Now, let's take a look at this from a high level, and then we'll come back down and take a look at it a little bit more granularly. What I want to first show you is active accounts up here. And that, like I told you, came in at 55.1 million. The street was expecting 55.8. Now, in the previous quarter, we were sitting at 53.6. So that's an addition of about 1.5 million subscribers. In the previous period, we went from 51.2 up to 53.6. So that is like 2.4 million. So you notice our growth went from 2.4 down to 1.5. And you see back in Q2 of last year, we went from 43 up to 46. That's 3 million subscribers. Here we grew over 5 million subscribers from Q3 to Q4. We still have phenomenal growth year over year, growing at 28%. But I think what some investors are starting to digest is, hey, look, this is looking a little bit like Netflix, that everybody that has a Netflix account has one, and we're not likely to see a lot of gains, at least here in the North America Canadian market for Netflix. It seems to be that Roku is catching up to that sense as well here very soon. Now, what Roku also keeps track of is streaming hours. So while, our number of accounts can stay stagnant or even go down potentially, if those existing users are streaming even more hours, and considering Roku does have an ad-based model, it's not necessarily just a subscription-based model. Well, look, we could run more ads if people are streaming more, but we actually see that went from 18.3 down to 17.4. We're still up 19% on that. Now, what has gone up and gone up a lot is ARPU, or average revenue per user. Notice we went from 32 up to 36. Quarter over quarter, year over year, went from 24.92 up to 36. So Roku is still churning out lots of money per user on this one. Now, what I want to do is show you a little bit of the profit and loss, and we'll look at the balance sheet on Roku as well, and then we'll jump over to the stock chart. Take a look at this from a technical perspective and see what's going on with this one. So for the last 3 months here, our left-hand column is our most recent quarter. We talked about how they came in at $645 million worth of revenue. Now, this top line is the most significant part of this revenue because it's the platform revenue coming in at $532 million. Now, the reason why I say that's the most significant is notice player revenue was $112 million, but we spent $119 million to acquire that revenue. So what Roku does, and this is not at all uncommon, is they basically give the players away at a loss, and they make all the money back on this platform. And we look at the gross margins on the platform, it makes a lot of sense. You spent $187 million to make this $532 million. That gives us a total gross profit of $338 million, because you take your total revenue, you minus the cost of that revenue, which came in at $306, you get this total gross profit of $338 million. So off of $645 million worth of revenue, to flow that much to the gross profit side, this stock absolutely checks some boxes in terms of revenue growth, but also high gross margins, which is two things that we really look for stocks, at least here on this channel. Now, we see year over year, we went from 146 to 338 on that gross profit. Now, we got other expenses here, R&D, selling and marketing, and some general and administrative. That gets us down to these total operating expenses went from 189 to 269. What I noticed here is I'm going to flip back to this screen. What I wanted to show you was their sales and marketing, okay, because this is really quarter over quarter. We're only getting year-over-year view here. What I wanted to show you was on a quarter-over-quarter basis for the last few quarters. So we got Q4 here. We spent $96 million on sales and marketing. The next quarter, we actually spent less to 88.9. This quarter, we still haven't gotten back to Q4, which makes sense. You're running holiday ads. Roku makes a really nice gift. They probably come out with new models right in time for Q4. So it's ideal that they spend this type of money, but I noticed that they're not blowing out their sales and marketing budget. So it could be that they're holding some things back. Maybe they're waiting for some new technology, waiting for some new shows, waiting for those types of things, but they have elevated this 46% year over year. So it's interesting. Their growth on this top line active account has started to stagnate, but so has their spend on sales and marketing. So it'll be interesting to see if they can reinvigorate active accounts by spending more on marketing, or if they're just going to simply spend about the same on marketing and ramp that up very slowly. We'll see what happens. But income from operations came in at $70 million. So off $645 total revenue, $338 in gross profit, we minus off this $270 in operating expenses. That gives us about $70 million worth of income from operations. Last year, we lost $42 million. You see here for the last 6 months, we're on that $70-ish million run rate because for 2 quarters, we're at 144, call it $145 million worth of income from operations. This is a company that has absolutely turned the corner in that sense. Now, they are diluting you. I would expect probably more dilution when we look at this balance sheet. It's a very nice balance sheet, but they're raising money by issuing stock. You see, last year they had 122,000 shares. Now they got about 142,000 shares. That's on a diluted basis. Now, from the balance sheet perspective, they're sitting on $2 billion worth of cash. They do have a little bit of debt, just a very small, tiny total liabilities only coming in at $1 billion. So that can be Roku's, like, kind of their saving grace, right? Okay. They can spend more. They can borrow more. This is a company that can probably raise money by selling some more shares to Cathie Wood as well. This is a company that could raise more money and continue to grow. So even if we see growth kind of stall out a little bit, I think the perma bulls on this type of stock are going to say, hey, they don't have a very leveraged up balance sheet. They can spend even more on content and customer acquisition and those types of things. Cash flow perspective, everything's looking great, okay? Very, very similar to our net income. Net income came in at 149. Our cash flows from operations came in at 144. This is a company that just prints cash. That's why you would really like to see these active customer accounts continue to trend up. Even if I think we're all expecting them to flatten out a little bit, but if this company can continue to grow, because we've got a $55 billion valuation on this. So I don't want to like gloss over that. Okay. That's a PE of a little over 1,000. Okay. So they have to grow into this valuation because I just showed you they don't have a ton of cash on the balance sheet. For 6 months, they're only printing $144 million of cash flows, let alone net income's about the same. Times that number by 2, you're only at about $300 million worth of net income. And again, you have a $55 billion valuation. There's people at a $5 billion valuation that would say the stock might be overvalued, and we're sitting at $55 billion. So we'll see what happens with this one. All things being considered, look, they proceeds from equity issued under the at the market offering. This is basically them just selling shares to investors like Cathie Wood. They raised $989 million in the last 6 months doing that. And I would actually expect that to continue considering the stock price has appreciated very nicely over the last year. Now, speaking of the stock price, we are down in the after hours. I'll put a little line in where it's at here, just in case you're looking at this on a phone. You kind of get a general idea where the stock is. We were up here at $420 per share. Now we're down here. We've definitely broken. We were in a nice little uptrend, actually. We were doing this on the stock. Okay, this stock, once it broke over 300, it rallied to 485, came all the way back down to 300, kind of had a pump fake rally, back down to 300, all the way back up to 480, retested 480 again, and it's got rejected, and now we're coming lower. So here's what I see with Roku. Look, if the pattern just continues, this trend is not intact. That is over. I mean, we could tag here at 360 or so and back test it. That's possible. But I think for me, I'd like to get Roku in this box. If I was interested in buying a stock like this from 300 to 360, this would be an interesting spot because this is where consistently the stock has bounced over really since the beginning of the year for the last 6 months. Obviously, if we break 299 on this one, all bets are off. You're going much, much, much lower on this one. For the bullish side, you're looking for a break above this 480. I think it's really obvious. The sellers have stepped in every time the stock got to the $480 per share mark. What you're looking for is a rally above this. You could look at charts like Google. You could look at a chart like AMD. You could look at other charts out there. When you break above this upper end of the range, these stocks tend to run, especially high-flying stocks like an AMD, like a Google, but especially like Roku as well. You get momentum behind this one. Sellers dry up. All of a sudden, this one could be off to the races. So those are the two things I'm seeing from a technical perspective. I think it's highly more likely that we head lower on this one. And if you want to buy the dip or average into this one, whatever it might be, I think you'll have some opportunities to do it down in there. But the thing that you'll absolutely need Roku to continue doing is continue to grow, because at a $55 billion valuation, these financials are fantastic. The gross margins are fantastic. The balance sheet is really, really nice. But we're still not printing tons and tons of money down here to the bottom line. And the only way we're going to do that, the honest to God, only way we're going to be able to do that is by growing these active number of accounts by a lot more than we have quarter over quarter since Q4. So they're going to have to figure out a way to re-accelerate that growth, because I think at some point you reach the lid on ARPU, or average revenue per user, on a stock like Roku. Because look, if Roku all of a sudden has too many ads or too many features that people don't like, well, they can easily go switch to something else. So hopefully you guys enjoyed this video. I'll be back again soon with more. Good luck with your investments.